Hi everyone. Today we're going to talk about converting uh, modified accrual accounting entries to full accrual accounting entries. Uh, Governmental funds are a type of fund used in fund accounting. The funds classified as government funds are the general fund, special revenue fund, debt service funds, capital projects funds, and permanent funds. A current financial resources economic focus and modified accrual accounting are the basis for governmental funds. Copley 2018 states the current financial resources measurement focus and modified accrual basis of accounting are unique to the governmental funds of state and local governments. The focus is on the flow of financial resources rather than income measurement. Modified accrual accounting, according to Liberto, borrows elements from both cash and accrual accounting, depending on whether assets are long-term, such as fixed assets and long-term debt, or short-term, such as accounts receivable and inventory. However, the government-wide financial statements are prepared using full accrual accounting, which recognizes revenue and expenses when they are incurred. So we must convert some government-type fund entries from modified accrual accounting to full accrual. To get the entries ready for full accrual accounting, we can use a conversion worksheet. These worksheets consist of a left-hand column, center column, and right-hand column. In the left, the fund basis financial statements are entered. We use the center column to make our adjustments, including eliminating certain accounts like expenditures. Copley 2018 states, general capital assets, general long-term debt, and internal service funds are added through worksheet journal entries. When all these entries needed are adjusted, the right-hand column is what we base our entries into the government-wide financial statements on. Here's an example for how we convert some capital asset accounts from modified accrual to full accrual basis. We begin the worksheet by recording the balances in the asset accounts and the depreciation that goes along with those assets. So say buildings debited at $10 million, we then credit accumulated depreciation at $4 million. To balance these, we also credit net position at $6 million. When it comes to acquisitions, we then need to get rid of charges to expenditure capital outlay and convert it to an asset account. So if the capital outlays are for more buildings, we debit to that asset account and credit the expenditures capital outlay account, which will close that account out. We then want to transfer our accumulated depreciation to depreciation expense. This is done by debiting depreciation expense and crediting accumulated depreciation. Say the government sold an asset, so we must convert the proceeds from sale account to an asset and gain on sale account. This is done by debiting the proceeds from sale account and crediting the asset account with the cost of the asset, then crediting any gain to the gain on sale account. Then we have to look at the net effect these worksheet entries have. For our acquisition, we end up with a debit in capital asset account and a credit to cash. For the depreciation, we have our debited depreciation expense and a credit in accumulated depreciation. Finally, in our sale, we have a debit in cash and credits in a capital asset account and gain on sale account. That's an introduction and some examples for converting modified accrual journal entries to full accrual entries for government funds to prepare the government-wide financial statements. Also included in those conversions are long-term debt accounts and internal service funds. These both use the conversion worksheet to achieve the necessary full accrual accounting framework. Thanks.